Hey everybody, this is Brett Fogle with a weekly update here on the crypto markets. Finally, we're starting to see some movement, and I wanted to give you guys an update. It's been pretty quiet and going sideways for the last couple of weeks, if not the last couple of months. So why don't we go ahead and dive in? I'm going to share my screen and show you some of the chart setups that I see happening, and some interesting things here. I think we could be due for a bit of a bounce here. What we're looking at here is the total market cap on a weekly basis. And so you can see this nice bullish engulfing candle here that would indicate and could indicate that we're going to bounce here. Really important that we do. I was a little concerned that we might have had a head and shoulders forming or a double top scenario. So while that's still possible right now, seeing a nice bounce out of these levels here on the just below the $1 trillion mark. Now, of course, very important, these big numbers on the total market cap. So if we zoom out a bit, we know that the high of the markets back when Bitcoin was hitting 69,000 is exactly when the crypto total market cap hit $3 trillion to the nose. 3.012. What is 0.012 trillion a month, friends? Right. So that was the top here. Bounced back below that, came back below 2 trillion, bounced up just above it, but really that $2 trillion level also rejected. So very important that we've been holding the $1 trillion level, which we have. It dip down below briefly right in here, this tail, which, as we know, a lot of these levels will be taken out and tested. So it's good that we held there, had a nice bullish engulfing on the weekly 2 weeks ago. And now this week, if we can hold here back above $1 trillion, of course, and another bullish engulfing candle. So looking pretty good here for the overall markets. So what do we see here on our proprietary indicators? Seeing this trend strength indicator turning up to green. That's what I want to see. I want to see it get back above the 20% line here, but we'll keep an eye on that for you. So that's important. The overall market is above $1 trillion in the total market cap. So, of course, we want to see that. We'll come back to some of the movers here on the trading view, big movers. I want to take a look at the monthly chart of Bitcoin first. And so also looking good here. You know, we had a couple scenarios that I'd outlined on this monthly chart. Nice little reversal candle here. If we can close here, let's see, we're coming into the close here on September, which is Saturday. So it's looking like we've got a nice little doji sort of reversal spinning top candle, depending on where things close here as of Saturday. But I do like that we're holding that all important 25,300 level, which, of course, if we zoom out, it was the kind of bottom here back in May of 2022, held a support, flipped below that, came up, became resistance here right in this early area. And then, of course, we got back above that 25,300 level here and sort of held this. We've been holding this level. So really important we do hold this level. But I do think there's a case for we go lower and could still see some lower prices here, but I think we do get a bit of a bounce and could still see kind of a head and shoulders play out on the weekly. So we'll take a look at this. But overall, looking pretty good on the monthly, coming back closer to oversold levels. You know, we did kind of push up in here and these overbought levels here in May, April, and June on our indicators there. And so also wanting to look at this. So it looks like we're kind of rolling over here, which, you know, I'd like to see another bounce, come down and bounce up off of some of these levels. And won't get into that right now. These are just some of the indicators that we use, but just looking at a MACD here and a stochastics RSI, we can see this, you know, stochastics RSI turning over. You know, we'd like to see it come down and then have another big bounce off of a support zone, right? So something kind of like this back in March of 2020, right? So we'd like to see that come down a bit and then push higher. The MACD, of course, back in the green on the monthly basis. You know, as we've seen in the past, though, we could see sideways action for some time. So if we just kind of move back over to the 2018, 2019, and came down, had another perfect parabola on the bear market there, got back into bullish territory in June of 19, but just really kind of went sideways for a full year. And so hopefully we don't have that scenario playing out. But perfect parabola on the 2022, 2023 bear market in the bullish zone here. So at least that's moderately bullish. And so we'll have to keep an eye on that. Can't really digest much more than that from the monthly chart. Over to the weekly, though, we see that we've got, you know, we're kind of pushing up on price action. And I had this as a Bitcoin pullback zone. And so again, we've been holding on that 25,300 level that we talked about and trying to get above the EMA ribbon. I'd like to see get above the 21 and 50-day EMA ribbon to propel us higher, and or just the EMAs. So let's see, we turn off the EMA ribbon here. So price is pushing up against the 50-week exponential moving average. So we'd like to see that. We did break down, however, below this uptrending channel. I was hoping this was a new upward trend channel that would hold. And now we're kind of in a sideways action with what's looking more like a double top to me right in here. We did see a weekly early reversal indicator here on this area, so I like that, and I like that we're kind of seeing that follow through. I'll close this down on my so my ERI, my early reversal indicator, triggered 2 weeks ago. And my trend strength indicator is turning green on the weekly. Again, I want to see this when it breaks above that 20 line. That's our kind of a confirmation area. There's a couple scenarios here I will alert you to, just so we know if we do push up, we we certainly could push up and have a catalyst and get us up to above that 32,000 level. I think that's when we definitively are back in the next phase of the bull, above 32,000 on a closing weekly basis, because as we've seen, we've rejected all through this area. And we've been in kind of sideways zone here between 25,300 and this 30,000, 31,000 range. So we need to see something happen there and a break. If we do pull down lower, I do have another chart on this just to give some context on this, but I want to watch for this weekly price to hold above, the 200 weekly moving average as well, which is down in this area. If I turn on the bull market support band, the problem here is we are still below the weekly bull market support band, and that typically will reject here and stay below it for some time. So if we zoom out, we can see whenever Bitcoin comes down below that bull market support band, it does tend to stay there for like 8 to 12 weeks, and we've come back below it here about 7 weeks in. So it just remains to be seen, but I like the bullishness of today's market here coming in, seeing some bullish movement. And so let's jump over to the next chart here for another look at this in terms of the where we could go on this. If we can, once we break above 32K, I think it's a pretty fast move up to the Fibonacci golden pocket here, up around 48,000 to 50,000, as we can see here. If we draw from the market cycle high, the market cycle low here puts that golden pocket right around this 48K to 50K region. So we can see that. But so what I'm expecting is we sort of languish here and turn higher at some point. Maybe it's happening now and we get up a little bit faster. And once again, breaking that 32K level, I think we might have some resistance here at the fib, the 382, the 50, the 50% retracement around 42K. But I think we really do push up. There's nothing really stopping us there on a major support resistance level up to that 48K golden pocket. Then we see a pullback and retracement, maybe back down to the 42K level of support, and then we start pushing higher. And I do see $100,000 in the next market cycle as reasonable. We didn't quite get there in the last cycle, but also on the Fibonacci's, just to give some price targets after this 1618, I've got the 2618 right about 155,000 Bitcoin, give or take. And then if we really have a nice bull rally here, which I think we will once BlackRock gets approved, the signals are pointing toward that's going to happen probably sometime around the halving. So first quarter of 2024 looking very exciting for Bitcoin, and I imagine we'll see people trying to front run that. And there's still that catalyst, that wild card, that possibly, not likely, but possibly they get a GBTC approval in October for their ETF, spot ETF. So they've kind of pushed that over. The courts, of course, saying that the SEC has to make a decision, and there's an October 17th date coming up for some of these spot ETFs. So probably unlikely, but certainly could happen. It's been known, Bitcoin and crypto markets have been known to surprise us from time to time. Is that right? So we'll want to make sure and be ready for everything. I'm a big believer of show me the charts, I'll tell you the news. And I do like this upward sort of bottoming pattern here and sort of curving up higher. So big question is, how high do we go next year? I think we could hit 210,000 here on the 3.618 Fibonacci target. If we can get some of these spot Bitcoin ETFs approved, we have China now officially unbanning crypto. So, gee, big surprise there, as they were accumulating it. So that whole time they kept banning it. We have JP Morgan Chase banning Bitcoin and crypto in the UK. Well, we know that JP Morgan and Jamie Dimon were accumulating the last time they were banning in Bitcoin, and telling Jamie coming out saying that he would fire anybody on JP Morgan staff who was recommending or selling Bitcoin. So, look, the writing's on the walls. Mass adoption is happening. We had a lot to sort out and digest last year. There are still hacks happening in the crypto market, but the only way we'll be able to find and prevent that from happening again is from the past. And so we hope that that's all behind us. So we'll just have to wait and see. I am seeing some nice movement in some coins here that we'll look at today here. Let's see, Bitcoin, of course, getting an early reversal indicator on my daily basis and starting to get back above the 21-day moving average. So I like that, and seeing a little bit of a bounce criteria here. So, I do want to talk about, I'll jump back over to a weekly in a moment, for a potential head and shoulders type of pattern that could still play out. And so let's see, I had a target on one of these charts here. I may have to pull it up on another one for a forecasted target on the head and shoulders if it breaks down. And I'll pull that up on a different chart here. I just have to find it. And you got a number of these different things. There's now different ways to skin a cat. Is that right? So here it is. Okay, so the CME gap. We have to talk about the CME gap. If, for example, I know there's a lot to unpack here. The background colors are the Fibonacci projections I just talked about. So what I'll do here is just toggle that off. Let me open up the object tree here just to clean this up for you a little bit. I don't want to do a full screen because it doesn't give me the same controls. I'll just toggle off that fib retracement. Great. Okay, so now let me go back to full screen so you can see this here. And what I'd be looking for is, so we have that bull market support band acting as resistance. Once we can kind of get back above this 28,000, let's call it, and I've got an alert set for 28K, that means we're back above the bull market support band. And then I think that we're off to the races. It's going to maybe go sideways, could even pull back again to give us that launch, that springboard to go up above that level. But if we turn off that bull market support band and just kind of keep an eye on things, if we do push up here, and so you can see this head and shoulders pattern. So, for example, if this were the middle line here, let me turn off my ERI here just to clean this up a bit. If this were the left shoulder and this were the head, there is potentially a right shoulder forming in this circle. So if we push up as we are, and I've been expecting and sort of forecasting it will push up higher into this sort of 29,000 range, it could be anywhere in here. And if it rejects though, and we get a right shoulder, the key to watch for is this measured move right here. Okay, so the measured move from the head, if this is the head, if we break below the neckline, that puts us right down and below that CME gap in this range of around 20,000. So the reason I have this circle drawn here, a couple things we can look at is we have this longer term trend line just coming out. Very important trend line from all the way back here in December of 18. Sorry, guys, I've got monitors all over. And we had it hold the COVID crash here, pushing up and holding here at the bottom here, November 2022, around 16.5, which I forecast back in May of 2022, we'd go down 16.5, which we did. So we pushed higher here. And so this trend line has to hold. If this trend line breaks, we do have some concerns, this trend line. So we really hope we don't have a head and shoulders breakdown and a measured move, which would take us down in this region. CME gap still exists around 20,000. These don't always have to fill, but usually they do. There is still an open CME gap all the way down at 98.75, just below 10,000. I don't see that filling, but we were talking about that last year as the worst case scenario, and I had traders putting in limit buy orders at 98.75 just to be able to have bragging rights down at the country club if they had $100, $200 fill at that price. But fortunately, we did not go back down. We did not go back and break below that 16.5 midsummer low. So best case scenario is we kind of bounce from here and push up higher. We just don't look back. Bitcoin has a habit of once it breaks through resistance, not even retesting it, and it's off to the races. So we just have to wait and see. So I'll move that question mark right back in here. So again, we push up higher, or we may see a pullback after that, and then we could go higher from there. Again, this circle, I'll widen it to include let me move this out of the way here, to include that trend line we were just looking at. So our area of interest here, let me just make that a bit smaller. Our area of interest here is right in this range. Okay, so come back, hold the 25,300 level and bounce. There's a lot of support there, as we can see, as a prior strong resistance level, resistance flipped as support. So we really like to see this come higher from here. If we break 25.3, we've got that long-term trend line here, which would be right around this 23,000 in this zone. I could widen that a little bit just so you can see. And then the below that, if that were to fail, we're then looking at down the 20,000 region, possibly lower on that head and shoulders measured move, but I don't see any reason for that. I do think we start to push higher here, October, November, coming into the end of the year ahead of the halving. Okay, so important just to keep that in mind. And seeing a bullish TSI turning on our weekly trend strength indicator and our early reversal indicator. When those two align, highly correlative, high probability. So I do think we see a multi-week bounce here, and more than likely come up and retest that 29.6 level. Okay, let's go ahead and look at some coins here, what was maybe moving. So here's Bitcoin in the daily basis, also getting our ERI TSI. So I think we see a bit of a sustained rally here. What else is moving? ETH looking good. We can look at, let's see, Bitcoin dominance, ETH dominance. I'm not going to go into that right now. Let's look at the DXY, though, for a moment, because DXY, a couple things to unpack here. It pushed right up to that 107 mark. And we saw Bitcoin and DXY going higher. Strange, right? Normally we see the inverse, but I do see this 107 level on another chart here, which I somehow have closed. This 107 level, really important level that I forecast we'd reject down from that. Let me go to the real-time DXY. This is the end of day data. So the real-time, about the same, pushed up to that 107 level, rejected. So, pulling back from that kind of helped fueling the Bitcoin rally. If we see DXY above 107, however, we have some trouble on the horizon, and likely to pull back, as DXY could push higher up in these higher levels. So just kind of keeping an eye on that. I will pull up the, let's see, the BTC1 here, just to show you that CME gap here, to make sure that you're aware of it. Again, I'm not saying it's going to happen, but right in here, see this, I'll just put a circle around it. This CME gap here, which actually this one did fill. That one filled. The one that is still open is this one right here, where we have this green box, which is that's our ERI Pro, which we've just come out with. This is money flow and a lot of order support. So I don't think, because of this, I don't think we go and fill this CME gap. There's a lot of buy order support right in that green box. Okay, so but you can see this unfilled CME gap between 20,300 and 21,300. So there's a 1,000-point gap here. If we were to see some catalysts and big scary move to the downside, I think it would could wick down in that area, and it would be immediately bought up, take out, liquidate, have a wave of liquidations and stop losses and capitulations. So to me, that's worst case scenario. So just be aware of that. That's on the CME chart. So what else are we seeing here? We looked at total market cap. Anything else moving? I'm seeing some cool things in the DeFi. So let's look up the total DeFi market here. Also looking pretty good on the, let me clean up the chart and turn off some of these other indicators so you don't have to see all the noise. There we go. And let's open this up for you. So total DeFi, nice cup and handle almost here, a cup and handle forming. So where might we want to set alerts here at the top of this sort of handle pattern right in there? So if we get above this on the total DeFi, I'm going to set an alert for that above, say, 46 billion, and as a nice cup and handle breakout. And that would be good. Obviously, I love the cup and handle, one of those tried and true indicators that usually does see follow through. So anyway, keep an eye on the total DeFi market if we want to look at some zero in on some other coins. that are looking good. Let's see, Phantom Coin, an old favorite here, kind of putting in a double bottom. And what I love about Phantom Coin is that it's down 93%. I don't love that, but I love the fact that if it rebounds, has a long way to go to the upside. And this thing certainly has had great runs in the past. The measured move here, let's see, if I take it from the market cycle high to the low, the upside on this is to go back to, we had we first recommended Phantom Coin in May of 2020 and had a near 20,000% return on that. So if we just look at that, where could it go back to its old highs? And that's 15x from where we are now. If it goes up to the 1.618 in the next market cycle, that's a 25x on Phantom Coin. Not financial advice, do your own research, but these are ones that I like to keep an eye on. And these nice bottoming patterns, a lot of support down in this region here. It doesn't have to be an exact level. These are support zones. If you're familiar with Wyckoff accumulation patterns, this is what you'll start to see is these accumulation in these lower areas. So you might want to keep an eye on Phantom Coin. And let's see, Rune has had some nice upside and movement here. Let's just kind of look at this. And I look at some AI coins, but what I'm looking at in these markets is, just as a barometer, if the coin gets back to its old high, does it have 10 or 20x? Look at Rune has 17x potential. Not saying it goes back to its old high, but as a barometer, at least a 10x potential if it gets back to its old high. And we're starting to see these nice bottoming patterns on a lot of these coins. So this is what I'm watching for right now. And this thing is not working for me for some reason. There we go. And just to I like these sort of bottoming patterns here. We're starting to see these. So you want to kind of keep an eye on those for potential breakouts. Let's see. I'm going to hop over to a different watch list to kind of see what else we might see. And actually might, let's see, Look Smart, that's sort of registering. Okay, don't worry about that. We'll go over to this top crypto movers in TradingView. If you're not aware of this, TradingView has these top movers. They also have the heat map, which you can Google. I know I spelled that wrong, but it'll find it for me. And there you go, stock heat map, TradingView. I want the one for crypto. However, there we go. Doing this a little bit on the fly. Cryptocurrency heat map. You can Google most of these things. And you'll see I turn off the gray, double click or click the gray one so that doesn't kind of wash out. But not a lot going on. XRP at 4.74%. Not a lot moving in the markets, but seeing some encouraging moves nonetheless. If we turn on the off the 1%ers and see kind of what's moving more or others. We've got Lido, DAO, Filecoin, a couple things moving over here on the crypto market movers. I did see one. Storage looks kind of interesting. Storage is an AWS competitor play similar to Filecoin. Here's why I think storage might be seeing some movement. Because of the AI projects and the sheer volume of AI requests, a lot of this, it requires web storage. It's going to fuel a lot of projects, needing storage on the web. And AWS is more corporate. So these cloud-based, decentralized file storage like Filecoin and storage, I think are starting to see that the benefit from the prospect of more data, namely AI. Because if you ever use ChatGPT, it's storing the conversation somewhere, and all that data where it's learning has to be stored somewhere. So storage pushing up to resistance here. I wouldn't be chasing this, but seeing a lot of these types of patterns on some of my other watch lists. So let me just jump over to my watch list here, which we looked at. And I'm going to hop over to a couple more of these here. We've got some other watch lists. Solana here. I've been watching this. Obviously, it's kind of a cup and handle pattern going sideways. Solana's really got to break higher. I've been watching weekly charts just for a little bit better clue on what's happening. Not much happening there. Solana in this trial with Visa to see if it passes for the new rails for Visa. And for a while there, it was pushing up and bringing some of the payment providers up with it. Not a whole lot going on here now. Again, we've got Rune kind of pushing up. What I really specifically am watching for, mark my words, are when the 21-day and 50-day exponential moving averages start to cross. When the 21-week moving average, specifically the weekly, when we start seeing the weeklies cross the 50 to the upside, we're going to see massive follow through. And this is what we've been waiting for weeks and weeks. So I would recommend drawing this on your charts. Here's one on Rune. Rune was a great pick for a while. I recommended Rune in December of 2021. Thorchain went up 157% before the markets crashed, so they're the key is take profits on these. Nothing goes up forever, but I like Rune here, bullish engulfing candle. It's back. I like to see price action above the 21 and 50-day exponential moving averages, and then on holding, and then to see them cross. Think of this as ice. So you don't want to be standing on thin ice. So, we've got on the way down here, the 21-day exponential moving average. If you're above the ice, well, that's great, but it's thin ice. You can fall back through any point. If you're under the water, you're coming up and hitting your head on the ice. That's not good. The thick ice is the 50-day exponential moving average. But when you're above it and above both of them, that creates that strength. You feel safer. You're going to stay above the ice and not fall back through again. Just an analogy to kind of give you, to help you stay ahead of these things. And you can use it on the daily as well. A way to get in early. The fact that Rune has been back above not only the 20 and 50 day, but also I've been drawing these patterns for weeks. And the fact that we're back above and outside of these downward trending channels. Another clue for you guys is as soon as you can identify a new trading channel, and once it comes back down and retests, these things do tend to stay channel bound. You've heard the trend is your friend, until that changes. So really what we want to see here, I may redraw that, as they go, they sometimes widen. But as of now, we're in a new upper trend channel in Rune. And so not a buy recommendation, just some recommendations on how to spot these breakouts as they're happening, before they're happening. Anything else we want to look at? Not a huge amount moving here. Again, storage kind of moving higher. Most of all, I would keep an eye on these things that are starting to move. And AI coins always of interest here. So we have a few things moving today. And you can sort these, but disregard my comments here. This is for one of our services, but we have some buy candidates, hot list. I'm not here to recommend anything, but most of all, these patterns, again, these trade channels, once they start breaking above and into a new upper trend channel, you want to be watching those. And let's see, what is this here? Doc here. I'm not, again, making, some of these are hitting these resistance levels. So just be wary of when they're going to start, pulling back. But we will be watching on our indicators as well, just to kind of see when are these things ready to go higher, and watching those weekly bait timeframes. So, we do have some overhead resistance on many of these. So keep in mind, overhead, if the 21 and 50 day or week moving averages are above, really important to break back above that. But I am looking for strong bases in these types of trend channels. When they start breaking out of these, that's the time that we want to be paying attention and looking into some of these coins. And so anyway, if you have any coins that you want us to take a look at, you can put it down in the comments. By the way, if you like if you like what you're seeing here, remember to like and subscribe to the channel here. Of course, Max does a great job with all of his guests here, and I'm always happy to come on and share what I'm seeing in the markets. So things kind of slowed down a little bit. I would look for quality projects showing strength in markets that are down, and being leery of low volume. So we can't trust these low volume movements, but at some point soon, we're going to start seeing these things really start to move again. And, again, ETH, I'd like to see it back above its 21 and 50 weekly moving averages, but on the daily, it is looking fairly good. So back to Bitcoin and, of course, Ethereum trying to break back above that 50-day moving average. That analogy works on both sides, though. The thick ice, the 21 is the thin ice, the 50-week exponential moving average is the thick ice. And what happens if you're underwater and you're coming up against thick ice? It's harder to break them above it. But once you get back above it, what happens? Let's go back a bit. The big moves happen, again, when you see the 21-week break above the 50-week exponential moving average. This is what we're waiting for, everybody, on Ethereum, on Bitcoin, and especially after a lot of sideways action. It's called gas in the tank. Gas in the tank. The longer something goes sideways, it's consolidation. It means the sellers and buyers are in equilibrium. So when it starts to break higher, it has higher to go. And once it's above the ice, it's going to come back and hold here. Here's where ETH came back and held the 50-week exponential moving average. Now, this was the March 2023, got down below that. Had a bit of a downturn here. Of course, earlier this year we had all kinds of things happening, like exchanges failing, Do Kwon, Terra Luna, and FTX. So these things will trigger the market, and we bounce back above that. So that was strong. Point is, these are your kind of lines in the sand. And once you're below the 21 and 50 or headed downward, and what we're looking for is to get back above the 21 and 50 week moving average, and also, above this trend line resistance. Point is, we are getting close, and I would even argue that it is breaking back above that. So keep an eye out for upward movements going into October, November, and hopefully enjoyed this. Watch the bigger, broader markets, and we want to see how, again, this monthly candle close, if it can close here, looks pretty bullish. The weekly candle close on these here. Let's go back to the weekly, and again, preferably, ideally, we push higher into Saturday's close, but as long as we're below the 21 and 50, a little bit bearish, but more likely to kind of pull back down and retest that 25.3 level like I've drawn. So just keeping these on your radar. You can take a screenshot of this, and that'll give you some guidelines on where we could go with all this. A lot of uncertainty, but the point is we will know soon enough. So be ready. The bull market will be back again. Many people saying with the BlackRock and other spot ETFs on the horizon. Just keep in mind, lots of money out there on the sidelines, trillions of dollars, $10 trillion allegedly with BlackRock. Could be more with these other spot ETFs, because it's once we see some positive, clear regulation, the overall crypto markets will also take off. But in lieu of that, and until we do, the only avenue for big companies like like BlackRock, except for hedge funds and their laws, they can kind of go into unregulated securities. And even though Bitcoin is not a security, according to the Congress meeting with Gensler, he reiterated Bitcoin is not a security. The reason XRP is up a little bit is because the courts had essentially sided with them and saying to the SEC, you've got to rule on this and give clarity. So giving a little bit of the nod that XRP is likely not going to be called a security. Good for the overall markets. But just to finish that thought, currently the only avenue for pension funds and big investment funds to go into crypto is going to be a spot ETF, which will very likely happen before there's meaningful SEC regulation on crypto. And I think most of you know that, just clarifying for those of you that may be unclear on that, but that will be the catalyst to really propel these markets higher. Certainly we have other fears out there, like the commercial real estate, the other shoe may drop there, a lot of other things in the economy, the recession, but the case for crypto is building and is stronger than ever. So anyway, thanks everybody. Have a great week and weekend, and we'll talk to you soon and keep you updated. Take care, everyone.